Welcome to another episode here on the channel. Today we're gonna talk about Netflix. On Thursday it's time for earnings season, and as a shareholder of Netflix I want to know what key metrics to look forward to and analyze before going into earnings. And today I'm gonna provide you with 10 focus on 10 different areas that will be very important for the coming earnings and the whole year of 2025. Obviously we are in some uncertain times here, and we want to feel very safe about our portfolio and not get shaky hands in this turbulent market. And for me, Netflix has been a great space to have my money on during 2023 and 2024, and I want to analyze whether or not 2025 is a year that will provide me with great gains also. Whether or not it will be great gains, I am certain that Netflix is a long-term position for me. Therefore, whether or not the stock are going trading higher or lower after Thursday, I will still have my position in Netflix. So I'm starting with the most important key metrics to look forward to, and that is the subscriber growth. So we want to see some subscriber growth here on Thursday. The latest quarter of 2024 we did see about 13 million added subscribers, so that was a part of why the stock performed so good during later stages of 2024. And heading into 2025 we want to see some more momentum, even though the first quarter here will not be as strong as like the latest quarter of the last year. Obviously not as many people will add Netflix subscription during spring and summer, so that is that. But we still expect to see at least 5 or 6 million added subscribers. If it's less than that, we might see a negative reaction on the stock price. But if we see more than that, like 7, 8, 9 million added subscribers, we might see a gain in the stock price and movement. We will also want to see not just this quarter, but also like the long-term trajectory of the subscriber growth. So it's important here just not to see like the specific gains at this quarter. Also the long-term view here is very important in terms of sustainable subscriber growth. We do not want just an artificial growth based on massive investment in like marketing. We want that sustainable long-term growth that Netflix do not have to spend too much money on to get. So we want the product itself to speak, and the releases on the platform to be great, to lure in more people to subscribe. The next one, the next metric that is important is obviously the revenue. We did see about 2.5% year-over-year growth here in the Q4 of 2024, and going into Q1 of 2025 we expect about the same level, about $9.4 billion in revenue. If we can do that, I as a shareholder will be satisfied, keeping up with the expectations of the market, or the street if you want to put it that way. We also have to push through some currency headwinds in like Latin America and the Asia and Pacific regions, so that is something to keep our eyes on going into earnings. Also, the earnings per share is very interesting. We expect to see a boost here in comparison with Q4 2024. So here we want like a guidance around $4.5 per share. So that is less. Obviously it's the first quarter, so it's less content spend and some favorable tax here, tax comps. So yeah, if we can have a surprise beat here on the earnings, that would be great. But you always, when you see the earnings, you always have to listen to the earnings call and read between the lines. Why are the earnings better or worse? Sometimes it's about timing, etc. So keep that in mind going forward. The operating margin in Q4 was 16.9%. In the full year of 2024, it was 21% in comparison with 18% 2023. So we have seen like an improvement of the operating margin, and we want to continue to see that growing trajectory during 2025. The operating margin is very important. It means that the business model is working, and the company itself get more money out of the investments, and they are reaching better profits. Profitability, the profitability is getting better, meaning they can improve the cash flows, the earnings, or they can use more money to reinvest and grow the company even faster. So it's a very important metric, and I hope to see during 2025 a great continuation and improvement in this specific metric. Obviously, we did talk about the earnings. We also need a great free cash flow. The cash flow is very important. It's a classic, one of the most important economic metrics of a company. Making the long-term sustainability of the company is always directly affected by the free cash flow. If the company and as a whole generate a lot of free cash flow, then we have a great starting place for being able to pay the debts, to reinvest the money, to improve the margins, to maybe improve the R&D spending, the marketing, etc. So a great company need an improved cash flow over time, and the bigger the company gets, usually the free cash flow gets better and better. And we did see during the whole 2024 $6.9 billion in cash flow. So maybe the last year here was the year when Netflix really showed Wall Street that they are here to stay. They are here to really live up to the expectations, providing such a great cash flow, despite just being a streaming company. So many people did not think that Netflix could be this profitable. It's the same kind of story that the Wall Street told themselves about Spotify early days. They will never be profitable. So I feel like the two companies like Spotify and Netflix is kind of the same. They have shown that being innovative and providing great content, great recommendations based on AI and what people view, they have get the consumer really stuck in the product. So yeah, that's something to follow up. What the expectation on the cash flow is about staying the same, $6 to $7 billion. So that's a bit, what can I say, about the same as the last year, but that can depend on different type of things like big investments, etc. So despite the cash flow being expected to be at the same level, the company are still going to grow. So some reasons why the cash flow might be flat for 2025 is the last year the cash flow was a bit higher based on some delayed spending during 2023, and we also did see some production costs pushed into 2025. So maybe 2024 was seen as a bit better in cash flow, in terms of cash flow, than it should have been. This is also about accounting standards. If you have like you can have the earnings per share to be like a certain way and the cash flow another way, depending on accounting principles and in what period you take like the cost for investments, etc. So it's about timing Also, it could be like strategic when they have like the strategic reinvestments, etc. So that is why it's easier to have like instead of going quarter to quarter, year to year, have that long-term trajectory for company, just improving the revenue, improving the margins. Then you know we are heading in the right direction. Keep that in mind. If you are like me, maybe you was wondering, oh, why is like the expectations for the cash flow flat year over year? But it can be several reasons for that. So and also sometimes Netflix lower their own expectations so they can surprise on the upside. So I would not be surprised, and I even hope that maybe they can surprise us on the upside in terms of free cash flow. So that is that. Also, they have starting to have certain subscriptions where you can watch Netflix cheaper, but to do that you have ads on the platform. So it will be interesting to see if that content continue to grow. So probably something that Wall Street will ask the CEO a lot of during the earnings call. So on Thursday, just listen to the earnings call and see how is it going with this advertising share performance. It will be very interesting to see. I'm quite sure that a lot of people will choose actually the ad version of Netflix because it's cheaper and because of the inflation and food prices, etc., energy prices still quite high for the latest like 3 or 4 years. Some people might just accept a bit more ads. So yeah, I'm allergic to ads, but obviously some people, I've analyzed this advertising tier in Netflix, and a lot of people are actually changing up to the ad-based Netflix subscription. So that's very interesting. And that can be a long-term driver also for the company, and they can find new avenues. Obviously, we all know how much money there are made in Hollywood. So if Netflix can eat more of that market, it will be very beneficial for the company. Also, the ARPU is very important for these kind of companies, the average revenue per membership. So if they can add a lot more subscribers and also the revenue per subscribers get higher, that is an extremely important and useful metric when you analyze Netflix, for example. Also the same with Spotify. And the global ARPU is about 11.76 dollars per member, and in the US Canada is about 16.64 dollars per member. So we can see here that there is a difference. So if the market matures into like the price point of US and Canada, they will earn a lot of money just on a maturing market and gaining more money per member. So that is what we like to see. We want to see that that revenue accelerate here. So the faster they can add that average revenue per membership in the whole user base, the better it is. So this is like a bit tactical. How much do you want to grow like revenue in new areas like India, etc., or how much do you want like the memberships you already have to pay more for the memberships? So it's like of a tactics here for the leadership of Netflix. Also, it's important, like close related to the ARPU or ARPU is like the churn rate. So churn rate means basically if people decide to end their memberships, and that is quite low at Netflix, about 2.2%, while apps like Disney and Hulu has higher churn rate. So keep that low is important and something that I will analyze also going forward. Even though I'm quite relaxed in my Netflix position, I feel like they done most things right. lately, even though I sometimes feel like they might go too much on like efficiency. I maybe want to see some more costly series, etc. And the Netflix production, sometimes I feel like they are really catering to like a certain viewership, and it's like predictable. A lot of the shows are a bit predictable, but obviously it's going very good for like that type of people that really wants to binge shows. That is working well. We're very good for them. But some of the productions I personally want a bit more like rare quality shows. That would be something that I hope they can add, so they don't just push for like these binge-worthy shows that are like not the highest tier, so to speak. Obviously, the content spend and slate outlook is very interesting. They often talk a lot about that during earnings call, like, oh, this year we are having these type of shows. Like the latest quarter we had that show, and it was the performance was like, oh, better than expected. We are going to have these lineups coming up, and we're looking forward to that. So quite often that is an important part of the earnings call, because investors want to see like some interesting shows and productions coming up. Also, what I like about Netflix lately is like they have become very good at like anime and that type of content. So if I compare them with like Crunchyroll and etc., they really have great ability to pick some great animes like Berserk, Monster, One Piece, etc. They find great animes, Parasite, etc. And they also have decent anime productions, like the Blue-Eyed Samurai, etc. So they are getting better at that, so they might actually in the long term become like the winner of the anime race. So we will see. A lot of people working in the anime industry are like underpaid and burned out. So if Netflix can win that industry, it would be huge for them, and also huge for the anime industry. So that is something that I follow quite close actually, and I'm pleased with what I've seen from the leadership of Netflix here. And obviously the forward guidance for every company when it's an earnings call, it's important to have conviction in the forward guidance. Where are we heading? Where are we heading? And what are we looking forward to in terms of economic outlook, subscriber growth, etc. So these types of metrics will be interesting to follow. So I would say like subscriber growth and guidance is like maybe the top things to look for, but also the momentum in the ad space, like how is it going with that, it will be very interesting. And also like the churn rates and the average revenue per user and the free cash flow will be really interesting to follow. And obviously the shows, what kind of shows are coming. When you listen to earnings calls, you get that long-term perspective that is actually really nice, and you get like a forward-looking, like almost can see in the future in a way that you don't do as a normal consumer. So I find that quite great also. So that's that. And also, before I end this, hopefully they can add some more interesting live sports events. I know it's quite expensive for them, so they don't have like whole seasons of NBA or Premier League football, etc. But they are starting to gain some momentum here, also having the WrestleMania now at the moment, and also adding some games here and there. So let's hope they can gain market share there also and find that sweet spot. That would be something to keep an eye on. Anyway, thank you for tuning in today, and don't forget to tune in on Thursday, the 17th, to listen to the earnings call. And yeah, that's all. Thank you for today. Bye.